Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be diving into fundamentals, going over a report that we sent out to our private CYPRX community, taking a look at the up and coming US data that is, in my personal opinion, going to have a significant impact on the price appreciation or depreciation of the total cryptocurrency market cap. We're going to be taking a look back at previous month's data and looking at how the market reacted, so that way we can really digest what to expect this upcoming week. Do me a favor, if you enjoy these deep fundamental dives showing you guys the ins and outs of the markets, smash that thumbs up button and subscribe. I do apologize for the camera and also the audio. I am currently out of town on a little vacation. With that being said, just excuse the picture. Let's jump into the charts real fast and just go over the total cryptocurrency market cap and take a look at the data that is set to come out tomorrow and Friday. Now, this is a fundamental post that we put out to the private community, which I'm going to go over and I'm going to read in just 1 second. But first, I want to actually take a step back and show you all why this data is so crucially important. So let's just read a little bit of this first, and then we'll get into this. So I said tomorrow and Friday, our primary focus will be on key labor market data, specifically unemployment claims, non-farm employment change, or the NFP, and the unemployment rate. Here is a brief explanation of these metrics. So let's just understand what they are to enlighten you guys and educate you a little bit further. First, we have unemployment claims. This is coming out tomorrow, Thursday, during the New York trading session. This measures the number of people filing for unemployment benefits for the first time during the past week. It is a leading indicator of labor market health in the U.S. economy. Then we have non-farm employment change. This measures the change in the number of employed people during the previous month, excluding the farming industry. Then after that, we have the unemployment rate, which is different from the unemployment claims. This measures the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So let's take a look back at the last time this data was released on Friday, May 3rd. This is why it's extremely important when I share my screen and we go over the total cryptocurrency market cap. We are going to be able to see the significant impact that it had on the markets in previous months. So back on May 3rd, the unemployment rate actually ticked higher from previous readings of 3.8% up to 3.9%. And at the same time, we had disappointing NFP figures dropping from 315,000 to 175,000. This data sparked a surge in risk assets and boosted optimism about potential rate cuts from the Federal Reserve. So when we take a look back at the charts from May 3rd up until now, the total cryptocurrency market cap has increased up over 19%, underscoring the importance of this upcoming data tomorrow and Friday. So we know that as of right now, the market, i.e. risk assets as a whole, are gripping on to the rate cut narrative. The idea that at some point in time, due to weaker U.S. economic data, loosening of the labor market, cooling of the labor market, and the recent disinflation that we saw in May, we are set to see the Federal Reserve make a decision on possibly cutting rates sometime in 2024. This has led to optimism in risk assets and created a bullish environment. For example, from down here at the beginning of May, we can see that the entirety of the month of May was primarily bullish compared to the previous month back in March, where we saw higher inflation readings, upbeat US data, giving strength to the dollar, and then seeing that continue in April with higher inflation readings, upbeat US data, geopolitical escalations and tensions driving strength to the safe haven status of the dollar, and an uptick in US data and inflation weighing further on risk asset and creating a stronger environment for the US dollar. Now down here, remember I mentioned to you guys in the report that at the beginning of May is when we had the previous month's US labor market data, where on May 3rd, that Friday, you can see here in this area, when we got those downbeat NFP figures and those higher unemployment rates, we saw a significant uptick in the strength of risk assets. The total cryptocurrency market cap bottomed out at roughly around $2 trillion flat and has significantly appreciated in value since then. So ideally, if we want to see the bullishness in risk assets continue, possibly even breaking back above 2.6 trillion and completely engulfing these lower highs from previous months back in April and possibly even March, we need to see a continuation of this bullish optimism in risk assets flourish, driven by downbeat US data, i.e., weaker labor market figures. So, with that being said, let's go over some of the scenarios that we printed out for our private community members. We said, and this is the most ideal scenario, this is the scenario that we would all like to see. For tomorrow and Friday, if we want to see risk assets flourish, we ideally would need to see downbeat figures in unemployment claims, the unemployment rate, and the NFP. This would likely create strong sell pressure on the dollar and ignite further bullish momentum in crypto, risk assets, and gold, as the market would anticipate the Federal Reserve cutting rates in sometime 2024. So here is a cheat sheet that I created for the private community members. You guys can pause this and you can utilize it to your advantage over the next 2 trading sessions, Thursday and Friday. Scenario number 2, which would be dollar weakness and risk asset strength, where we see weak or downbeat labor market data. This would be driven by unemployment claims coming out higher than expected, indicating more people filing for unemployment benefits. Non-farm employment change on Friday coming out lower than expected, indicating sluggish job creation. And then last but not least, unemployment rates coming out higher than expected, indicating more people are unemployed. The market impact that would most likely take place is we would see a decrease in the value to perceived economic weakness of the US dollar. This would most likely lead to risk asset buying, crypto, GBP, euro, and gold. Increase in the value of these assets as investors seek higher returns from risk assets. We would most likely see buy pressure on these assets, and we would most likely see overall this data signaling economic weakness and potential vulnerabilities in the US labor market, which would boost optimism about the potential possibility of Federal Reserve rate cuts in 2024. So, with that being said, on the US dollar, what I could see if that market scenario unfolds and we fail to break above these previous highs on the US dollar, coming in at roughly around the 104.5 psychological level, possibly even these lower highs at around the 105 key psychological level, give or take some liquidity grabs above these highs, we are most likely going to continue the downwards momentum that we've seen over the past consecutive couple of weeks, possibly leading us back down below the 104 key psychological level and possibly correcting more of this previous bullish move from the left-hand side, plugging us back down into the low 103s, possibly even breaking down into the 103 flat. This would be a scenario, again, where we see weak US labor market data across the board, both Thursday and Friday. How that would correlate in the total cryptocurrency market cap, again, if we want to see this continued bullish momentum take place and unfold, weak labor market data would most likely result in a sustainable bullish move, pushing us back above the $2.6 trillion threshold, completely engulfing these lower highs from back in April, and continuing this upwards trajectory. Holding these previous demand ranges, I could see some slight pullbacks down into 2.5, possibly even $2.45 trillion before continuing the momentum higher. This would be the most ideal scenario for us as risk asset investors in the cryptocurrency asset class. Inversely, again, utilizing the cheat sheet, where we would see a scenario dollar strength, risk asset weakness. Again, you guys can pause the screen and use this cheat sheet to your advantage. We give these cheat sheets to our private community. I hand type them out every single evening before the data actually comes out, so our private community members in our Discord have them. Scenario number 1, which is supposed to be inverse, but again, just for the cheat sheet, this would be strong, upbeat, or resilient labor market data, led by unemployment claims coming out lower than expected, non-farm employment change coming out higher than expected, indicating robust job creation, and unemployment rates coming out lower than expected, indicating fewer people are unemployed. The market impact that would most likely happen is we would see an increase in the value of the US dollar and sell pressure on risk assets like crypto, GBP, euro, and most likely sell pressure on gold. as this would weigh on the rate cut narrative and the likelihood of the Federal Reserve cutting rates in 2024, signaling a robust and healthy US labor market. In a scenario where we do see upbeat labor market data from the US, most likely scenario that we're going to see on the dollar is here. You can see this is when the previous data came out on May 3rd, that last Friday. We're most likely going to see this previous demand range hold at roughly around the 104 flat. And we're going to see the dollar break back above the mid 104s and make its way back up into the mid 105s, possibly breaking this previous downwards trend that we've seen over the past consecutive month. How that would most likely correlate to crypto, again, keep in mind, all my followers, if we do see a depreciation in crypto or a pullback from these previous bullish moves, correcting last month's bullish trajectory, I don't want anybody to think that it's a negative thing. I don't want anybody to think that I'm calling for the crash of a market or anything like that. Because here at CYPRX, we're going to be taking advantage of these discounted opportunities if they do arise. So if we do see stronger dollar heading into the weekend due to upbeat labor market data, what I'm projecting is a significant pullback from these previous bullish moves that we've seen in crypto, where if we fail to break above $2.6 trillion and take out these April highs, we do not create any bullish order flow above 2.5 trillion due to upbeat labor market data and stronger dollar, we are most likely going to start to correct some of this previous bullish move. $2.48 trillion will be my first bearish target. Underneath of that, 2.4. Underneath of that, I'm looking at the price to come back down into $2.3 trillion before making another decision. We would then see a significant decline in the price of the vast majority of assets across the board, and we would see a risk-off market environment intraday on Thursday and Friday. So be mindful of that. Again, if we do see a downturn in the market, that is ideally what we would not like to see. But if it does unfold, you now know why. Driven by stronger US data, strength in the US dollar, and optimism in the US labor market, that would be a scenario where we see risk asset selling pressure and a correction of this previous move from back in May. Obviously, of course, the ideal scenario would be for us to see downbeat US labor market data and continued strength in risk assets, breaking out of this sideways movement that we've seen in crypto over the past consecutive couple of weeks. With that being said, hopefully you all enjoyed this video breakdown, this quick fundamental overview going over the total cryptocurrency market cap, the US dollar, and the US data. If you did, do us a favor, smash that thumbs up button and subscribe. Real quick video breakdown. Just wanted to get this out to you all before the US data actually dropped on Thursday and Friday. Make sure that you all are paying attention to these key metrics. Make sure that you all are subscribed to the platform. I could not thank you all enough. We just smashed through 25,000 subscribers. We really do appreciate the love and the support here at CYPRX. Many blessings to you guys. Be cognizant, be aware out there, and I will see you all in the next video breakdown.